the poll of analysts showed that a loss had been forecast, but you reported a profit thanks to trading gains in volatile markets. You used to run that division. Which are the big trades or trends that you would highlight as having been particularly successful?
Well, good morning, by the way, and I think first of all it has been a very exceptional and extraordinary quarter for us, and in many ways I think we also have been looking at the most dramatic quarter in the history of the oil market. So I think what has been characterized the oil market is a lot of volatility. We have also been deep down in the commodity environment and had a contango curve ahead of us. So it's this situation and with the capacity to utilize this volatility and the contango curve that has given us a strong trading performance in the quarter. So really good to see that in the quarter where we really need it as well, because if you look at the upstream part of the business, it is more on the negative side actually. So combined, it's really good to see a positive result that you indicated.
Eldar, let me ask you about the value of your assets. Good morning. You have not taken write-downs based on a reassessment, a lowering of assumed oil prices. Others in the sector have done that. So BP and Shell, for example, taking big write-downs because they've assumed lower oil prices into the future. You've assumed still $77 in 25, I think, $80 in 2030. Why do you see your approach as different, and why do you take that different approach?
Well, I can't comment on what other companies are doing. I have to relate to sort of our views and what we see in this situation is a lot of uncertainty, maybe increasing uncertainty. We see that the COVID situation could impact the demand side in negative direction, but we also see a potential impact on the supply side. That's not being discussed that much. With the less capacity in the industry, less risk appetite in the industry, and that could even have a bigger impact than we might see on the demand side. So to us, there is a lot of uncertainty, and we relate to our own analysis and also independent analysts out there. We see IEA scenarios, Wood Mackenzie, Energy Aspects, others, EIA that have even higher at the same level as we have in terms of long-term assumptions. So we are comfortably within that space and have seen no reason to change the assumptions in connection with this quarter.
I wonder if you talk a little bit more in depth about the demand side, because we're worried about the possibility of a double-dip recession in the U.S., or at least a stalling of the economy there. How do you see demand shaping up right now, Eldar?
Well, it is underlying all of this. There is the COVID uncertainties and the potential for lockdowns and the continued negative impact on the demand side, and particularly related to transportation fuel, but also industrial demand. So to us, it is basically a very fragile situation. A lot of uncertainty on the demand side, and that creates a very sort of unique situation. And also, as I said, if you combine that with the uncertainties on the supply side, we see a lot, record high storage levels have developed, and basically with the time spreads coming down significantly, there's less incentive to keep those volumes in stock, and we also see a lot of volumes that have been held back because of the low commodity environment ready to come back into action. So it's really as I said, a fragile and challenging situation in the markets for quite some time, actually.
Yes, and on that front, looking at the supply side and the storage issues, Eldar, can the market absorb an increase in supply from OPEC and friends, OPEC Plus, that's set to hit the markets next month?
Well, I think that is basically the situation. There is, as I said, a lot of volumes that is prepared to come back into the equation from the supply side, and basically the only thing that can support a balanced market going forward is that demand side is picking up, and eventually it will. But this shape and form of that pickup and what that will look like is highly uncertain, and it goes back to it's a global recession basically we are facing now, and when the global economy and more specific demand into the energy sector and the crude oil sector, what that's going to look like, and in particular the transportation sector, when that is going to to pick up and support the demand side. So very fragile and challenging, and a lot of uncertainty ahead of us. And I think that also will include a lot of volatility in the markets going forward.
I guess there's some uncertainty to some extent, for shareholders as well. You cut your dividends and halted your buyback program previously. What kind of situation do you need to see before you're able to raise shareholder payouts again?
Well, this is, there's no specific individual triggers. This is, basically referred to in our dividend policy. It's about the financial situation for the company, what it looks like. It's about the outlooks for that situation. It's the commodity outlooks and the expectations for the future. So basically, we'll have to look holistically into this and make a judgment call. And one thing I can say is that this quarter's dividend is not the guidance necessarily for next quarter's dividend. This is a judgment call that we will have to make as long as we are into this situation and the current situation, and we'll just have to make that call when we come to the next quarter, when it comes to the shape and form of future dividends.
Eldar, let me ask you about the future of the business sort of strategically, I suppose. You've said this year that the company will be smaller in the future. Just elaborate on that a little. What do you mean by that?
Well, that was a comment I made basically on the need to become even more efficient, and basically we see a company. We have indicated some downsizing in throughout the organization. We will simply, have to continue to improve continuously, and that will have an impact on the total workforce. I don't know exactly how much, and I have no indications in terms of number of people and our percentages, but it will take us into a sort of becoming a tighter company in the second half of this year. So that is something we'll have to come back to, but it's basically, pushing efficiency and also including the impacts from new ways of working that has been stimulated, and I've seen a lot of things we can do differently actually from the COVID situation, working from home and traveling less and so on, and that is also going to support a more efficient company going forward. So that was a comment I made in relation to efficiency and improvements going forward, and more than actually the overall portfolio and scope of the company.